Alright guys, yesterday we went over this article. It's desperate clients hold up Lebanese banks to get their own cash. Yesterday we went over bank runs and the financial crisis that is going to crush hedge funds incoming. Well, this was just put out. US bank regulators consider new rules for regional banks in time of crisis. A group of bank regulators appointed by President Joe Biden is considering new rules which will require regional banks to add financial cushions that can be used in times of crisis, the Wall Street Journal reported on Sunday. The new steps include the regional banks raising long-term debt that will help absorb losses in cases of insolvency. I don't know what can get worse about our financial system and our economy right now and the way it's moving right now. Every single person in office, the higher-ups, every single person in power have absolutely no idea how to run a country, how to do their job, and how to set things in place to go forward in a positive manner. It's absolutely disgusting. With that being said, the Federal Reserve expected to raise rates 0.75 basis point or 100 basis points coming Wednesday, so that will affect the market. The next thing is Joe Biden says the COVID-19 pandemic is over, which I personally believe he's just doing all of this stuff because the election in November, but let's move on. Biden also says US forces would defend Taiwan in the event of a Chinese invasion. This is already going to cause more uncertainty in the market, plus the Fed's rate hikes Wednesday, plus more incoming, plus the housing crash, etc., etc. With that being said, US home value falls in August by largest amount since 2011. Also, India's top lender has asked exporters to avoid settling deals with Bangladesh in the dollar and major currencies. This is the last thing I wanted to touch on before we get into the charts because it actually does mean a lot. 65 billion was wiped out from the global cryptocurrency market in the past 24 hours. If we pop over to Bitcoin, you will see that it is actually selling off and testing this support level again. It does look like it's going to break to the downside in my opinion. Now, if you overlay AMC's chart over Bitcoin, you will see that the first time Bitcoin crashed in May of 2021, AMC flew. But what was different about this crash in Bitcoin and cryptocurrency and in the SPY? That started around December of 2021. So if we look at the first time Bitcoin crumbled, this is the time frame on the SPY, and this is what happened. The SPY dropped 4%, aka 17.29 points, and then up here it also dropped 4.63%. Now, both of these times, these drops are very, very similar on the SPY. Not only that, but crypto was liquidated. Now, why would a hedge fund hedge 4% both times? This is actually pretty interesting, and I found that this might be the hedge fund's way of trading the overall market. If you take where the SPY is trading at literally right now, and you take this 4% range, you will see that you hit resistance, right? Now, the same thing to the downside. You take that 4% zone, and that was recent lows on the SPY. I mean, it's pretty interesting because wherever you put this, it is a fantastic spot to hedge. Again, the SPY, if you did it at the peak, this is where it would touch support at recent lows, and that you would see, okay, this is a good time to close your position. Well, how come AMC didn't run when crypto sold off this time? What is the difference between this and what happened back then? If we think about it this way, right? If hedge funds hold liquidity in this and they're selling off liquidity because they have to, have collateral alongside the market falling, we'll use this as S, okay? This is a SPY. If they need collateral alongside the market falling and they do it, they grab it out of crypto that they're holding where it's stashed, right? I'd say the differences are that, of course, we expected to enter a bear market rally, right? We expected a bear market. We broke recent lows, okay? From a hedge fund standpoint, this is simple. But the difference is that both of these times, right, both of these times that the S&P 500 actually sold off 4 points or so, this time around was different because the SPY sold off quicker, right? The SPY sold off quicker. Crypto dumped quicker. Point is, the sale of blue chip stocks causes the SPY to fall. The sale of those alongside the removal of liquidity because we're entering a bear market just gives them more leverage on other stocks such as AMC. However, if Bitcoin can fall and reach a low before the S&P 500, keep this in mind. Keep this in the back of your head. If Bitcoin can reach a low before the S&P 500 reaches a low, hedge funds are going to be in trouble, right? They can carry AMC with this down to a point. If the S&P 500 starts dropping further than this point, it's game over for hedge funds, it's game over for short sellers, it's game over for crypto in the short term. And overall, I wanted to touch on Bitcoin and SPY, and that is my take on those. Now let's touch on the AMC and GameStop chart before we close out the video. 2 days ago, we had a very interesting video about the cycles playing out, and we came up with a time frame. It's what you see in this pink, and this is actually a time frame in which AMC would have a major move late October. However, it would also have a run late September through early October on the way up, right? Now, if these cycles were invalidated somehow, even though they haven't been over the past 2-3 years, you also have two other cycles to fall on, and that's the first one that caused the January run-up, or that led up to the January run-up. If we overlaid this, right, where the U happens, you get the pop, and then you get the sell-off, and then you get this oversell of lows before a run-up, this starts a run-up at the beginning of what we have mapped out. Now, okay, if that invalidates, you also have the same setup right here before you see a major move one way, right? In this case, it was a major move to the downside. And in this case, it was a major move to the upside. Both of these are the same cycles. This cycle also lines up. And where does this cycle lead us? It leads us to the end of what we have drawn out. So in this particular time frame, right? In this particular time frame, from September 26th to November 7th, AMC should have its next leg up, and this is just my 2 cents. It's just my take. I'm a YouTuber. None of this is financial advice. You get it. Before we get into GameStop, I just want to let you know I'm going over 2 tickers at the end of this video that you can potentially make money on, and I am actually playing one of them. So let's get into what I think about GameStop. This is the setup for GameStop if it tracks alongside this cycle, right? You get one more pop before a slight sell-off, leading into a major move, hopefully to the upside. This time frame is September 23rd to September 29th. This is the first pump, the first push-up that I am seeing before hitting all-time highs, which would be mid to late October. So I think GameStop will happen slightly before AMC. This is just my 2 cents. This is just my take. In the very short term, I think GameStop will make a high back up to 32 before getting slapped back down, just in my opinion. Now, of course, some of these cycles can play out inverse, so be very careful with that. Now, before we close out the video, I actually have puts on ticker symbol MULN, and this is very high risk, and it could very well stomp me out. Okay, so the cycles we've been tracking with Mullen, we've been talking about this big move coming up in the cycle, and it's finally here, and I'm glad to finally be putting it in a video. Now is the time for Mullen to actually start playing out in this cycle. The first time this happened, it was 33%. The second time was 51%. However, if you get stomped out and it goes inverse, these are 150% gains to 128% gains. And this cycle, this part of the cycle played out inverse. And when this does happen, sometimes these actually move inverse to the upside amongst this aggressive period. So just be very, very careful. If shorts get stomped out in the market, this can happen and can push up to the upside and stomp out my puts, but I am willing to risk it. And finally, the next ticker, I'm pretty sure it's self-explanatory for you. These are the cycles we've been tracking. Look at the percentage gains on every time this cycle hits. These rarely ever play out inverse, so BBIG calls seem pretty safe for me. I do think it has a day or two left to make some new lows or relative lows before getting this pop, but it is risky to try and time it perfectly. I do think there is a 50% or more potential gain on BBIG for calls, not financial advice. This is it. This is all I got for you guys. Hopefully you've taken something out of the video, and I would appreciate it if you hit that like button, hit that subscribe button, turn post notifications on, and also add me on Rumble. Make sure to drop a comment down below on your tickers you want me to analyze in a YouTube short, and I will do that. Just make sure to have post notifications on so you can see your YouTube short and so you don't miss it. Make sure to get your 10 free stocks linked in the description and pinned in the top of comments for downloading Moomoo and depositing 100 to trade on there. Overall, I'm really excited for this week. I love you all. Lottery stocks out.